Hey there, Singaporean investors. Welcome to the Investing Iguana's daily SGX market digest for September 29th, 2025. Ranked 8th in Tiger Broker's 2024 Influential Tigers, this channel crossed 1 million reads and 58,000 likes, with over 1,000 videos and 600,000 watch hours as of August 2025, plus regional and global macro angles for context. In the next few minutes, here are the critical updates, hidden insights, and what they mean for capital on the SGX today. The Straits Times Index has hovered in the 4,260 to 4,270 band after closing at 4,265.98 last Friday, mirroring a cautious regional tone. Early indications showed a slight positive open near 4,270 this morning as breadth improved, while STI remains up strongly year on year and near recent record highs set in September. On a trailing view, the STI touched an all-time high in September and is up roughly 19% over the past year. So sentiment is constructive, even as investors digest global headlines and local corporate news flow. Optus suffered another outage on Saturday in Dapto, New South Wales, that disrupted some emergency calls for about 4,500 customers. The issue is now resolved, and a Singtel delegation is in Australia this week to meet Communications Minister Anika Wells over earlier disruptions tied to fatalities, keeping regulatory risk squarely in focus. Singtel shares were $4.26 at Friday's close and slid as much as 3.8% to near $4.10 shortly after market open today on the renewed Optus headlines, reflecting concern over potential penalties and reputational impact at the subsidiary level. Bigger picture, Australia's probe into the September 18th emergency call failure and ongoing scrutiny of Optus's resiliency could cap near-term multiple expansion, even as core Singapore and enterprise segments remain steadier. Watch for management updates, post-meetings with Wells, and any provisioning signals. Wilmar maintained guidance for a full-year 2025 profit, despite Indonesia's Supreme Court verdict requiring surrender of roughly 11.9 trillion rupiah in compensation, plus fines, with the company flagging a likely third-quarter net loss as sanctions are recognized. Chairman and CEO Kwok Kun Hong acquired about 2.7 million Singapore dollars of shares via linked entities, lifting confidence signals even as analysts expect earnings impact from the ruling and asset seizures tied to the 2021 to 2022 cooking oil shortage case. Shares closed at $2.85 on Friday after intraday lows near $2.78, a multi-year trough. Near term hinges on cash impact timing and appeals or settlements, but insider buying and long cycle agri margins argue for reassessing value once legal overhang clarifies. Yangzijiang Shipbuilding canceled $180 million of contracts for 4 medium-range tankers after critical information suggested the buyer's sole shareholder was involved in circumventing U.S. sanctions, while securing $440 million of new orders across container ships and bulkers, including 11,800 TEU units for C-SPAN. The group had collected deposits of about $22.5 million and recognized no revenue on the canceled contracts year to date, tempering near-term profit and loss impact. Shares closed at $3.28 on Friday, down 1.2% pre-announcement, with order book resiliency and sanction risk governance in sharper focus. Overall, mixed upgrade toward higher spec container ships and steady year-to-date wins of about $1.9 billion provide buffer, but compliance diligence and counterparty risk management remain key watch points for 2026 to 2029 deliveries. CapitaLand China Trust appointed Yan Lin Tong as CFO designate effective October 1st, succeeding long-serving CFO Tan Soo Bee after a transition period, with Yan bringing prior experience across CapitaLand, Ascendus REIT, and fund management. Units closed at 78.5 cents on Friday, up 1.3% before the news, as investors weigh governance continuity against China retail and business park fundamentals that remain sensitive to macro stabilization and leasing traction. For income-focused holders, watch upcoming guidance on capital management, refinancing costs, and any asset recycling as the new finance leadership beds in. Sasor REIT's CFO Xie resigned to pursue other opportunities in China, with financial controller Jia Yali covering finance in the interim while the manager seeks a replacement. Units ended flat at 68.5 cents on Friday. Investors will track succession speed and any changes to funding plans as broader China, outlet mall recovery, and tenant sales momentum remain the core drivers of distributions. Management bench depth looks adequate near term, but clarity on the permanent CFO and balance sheet strategy will help narrow any risk discount. Metro launched a retail partnership with Shinsegae International, debuting 6 Korean brands via Paragon pop-up through October 5th, with collections to be carried at Metro Paragon until October 31st as the retailer leans into immersive concepts and global tie-ups. Shares fell 2.8% to 51.5 cents on Friday after the news, suggesting investors want to see footfall conversion and margin uplift evidence as department stores pivot toward curated experiences and exclusive labels. The collaboration marks Shinsegae's first retail partnership outside Korea, offering brand discovery and potential traffic catalysts into the year-end shopping window. 2 themes stand out today: regulatory risk and leadership change versus operational resilience and order book strength across industrials and consumer plays. The crucial takeaway is that event risk, whether network outages with public interest implications or legal rulings abroad, can move SGX counters fast, so risk budgeting and position sizing matter as much as valuation screens this quarter. Strategy-wise, maintain a diversified core, prefer balance sheets with headroom, and demand catalysts with measurable key performance indicators, like order book delivery schedules, insider alignment, or concrete retail traffic and sell-through data, before adding on dips. That's the scoop for the SGX today, September 29th, 2025. For real-time analysis and early alerts up to a week ahead, the premium membership is just $3 a month. Link in the description. Like, share, and drop thoughts on which catalyst matters more now: regulatory cleanup at Optus, Wilmar's legal overhang resolution, or Yangzijiang's order book execution into 2027 to 2029.